Hey everybody, welcome back to Chipstock Investor. I'm Kasey,
And I'm Nick.
and we're going to be talking about macros today. No, not those macros, not protein, fat, and carbs.
Now, this is not Casey's health and nutrition for workout channel. Maybe that's a channel for another time.
For another time. Today we're going to be talking about the big macros, economic macros.
Yeah, macroeconomics.
We will discuss macroeconomics through the lens of two important companies that give some context to what is going on in the macro world right now.
Visa and Booking Holdings, two longtime favorites. No, not semiconductor companies, but we're going to do it anyways because it's our channel and
We do what we want here.
we do what we want. We do real research, and this is what we're researching right now.
So why are we starting off this conversation with GDP numbers?
Yeah, that was the big news. Perhaps you've seen it already. US GDP contracted by 0.3%. And the main reason why the orange bar is the total real GDP number, I should say expected. At this point, it's still the initial estimated GDP for Q1, but negative 0.3%. Everything looks pretty healthy until you look at that exports and imports section on the far right, the blue bars, exports barely up, imports quite a bit down. Basically, what happened is a lot of businesses in the US began stockpiling things ahead of, at the time, what was the mystery surrounding Liberation Day and the tariff announcements. That's why GDP went down. We'll, of course, need 2 quarters in a row of negative GDP growth to officially call a recession. But do note, even if a recession is declared, if there's a negative GDP reading in Q2, these numbers are goofy. It doesn't tell the whole picture. Excess imports ahead of expected tariffs. It's a strange thing. It's a strange period of time that we're in. I expect this might actually continue in Q2, given that the tariffs were temporarily paused while the US negotiates trade deals with countries. So there could be more of this inventory stockpiling going on in Q2, which could create this kind of artificially induced recession, even though consumer spending and other metrics remain somewhat healthy. We'll keep monitoring this. That's why we started off with this, though. And then we can talk about macro through the lens of a couple very large global businesses to add some detail.
Okay, we'll start with Visa's free cash flow per share growth.
We made this chart with our friends over at finchat.io. This is free cash flow per share growth, our favorite end all be all metric when analyzing a company's valuation. If you happen to be watching this video on Thursday, May 1st, you actually have one last final day to catch FinChat's semi-annual 25% off sale.
Yeah, you can get 25% off any paid plan with finchat.io/CSI. We'll have that link in video description as well as here on the screen. That's 25% off any paid plan. The sale only happens twice a year, so get it today.
This is on a quarterly basis, so it's very noisy. As you can see, lots of peaks and valleys. But if you draw a straight average line through this, you get the nice, steady compound growth that you like to see. As we talked about, especially late last year and earlier this year, diversification. But these are the type of anchor type businesses that you want in your portfolio, even if they're boring, because they can perform decently, let's say, even in unpredictable times, and anchor your portfolio when other things are not doing so hot. So let's break it down a little bit more here. We talked about this in a presentation on Visa last year. I'll just review this really quick. Why are we talking about Visa at all on Chipstock Investor? Visa is a big data center business, a very large global network that connects their data centers that handle transaction and data security for their customers to lots of financial institutions and many millions of merchants around the globe. And so you end up with this crazy looking chart. Visa's network at the core is 4 data centers, 2 in the US, 1 in the UK, 1 in Singapore. And then the network of networks, those core Visa data centers connect to lots of regional hubs and financial institutions, and that's where you get this spider web of connections that interconnect all of the merchants around the world that accept Visa. That's where the whole anywhere you want it to be ad slogan comes from. So that's why we're talking about Visa. It's a good proxy for macroeconomic activity. And so here's what they reported in their fiscal Q2 2025, corresponds to Q1 the calendar year. 9% top line growth for revenue, and on an adjusted basis, 10% earnings per share growth. What drove that revenue growth? Services, data processing, and international transactions. Those are the big core segments. 9%, 10%, and 10% respectively. The smaller segment, other revenue, things like security services and other add-on services to the Visa network, much smaller segment, but the fast-growing segment, 24% year-over-year growth. Balance sheet, very healthy still, approaching 16 billion, 17 billion in total cash and investments. Total long-term debt, also nearly 17 billion. So healthy balance sheet still for a company that's past its stage of high growth, but still a consistent compounder. And then the outlook. Let's just linger on this for a moment here, because this is where we want to just get a pulse of the macroeconomic environment. Visa actually just reiterated its Q3 outlook and full year 2025 outlook that goes through the end of September this year. Still expecting low double digit, low teens. So let's call it maybe somewhere in the range of 10 to 12% revenue growth for the year. And on an adjusted basis, earnings per share slightly outpacing the revenue growth. Good operating leverage, good network effects for Visa. And obviously they did say there was some disruption to the flow of money this quarter because of tariffs, but money is still being moved around. And that, at least at this stage, is good news for the health of the global economy. Visa is very much a global business. It's not just a US business. Even some of the recent headlines about external travel to the US, especially from like Canada and Europe, but that is a pretty small, almost especially travel, a meaningless part of Visa's business. As long as money keeps moving around the global economy, Visa can continue to put up healthy growth rates. So at this point, yes, the flow of money has been affected, but money is still being moved around, and that's good news. Overall, this at least should assuage fears that we're hurtling towards a very near-term economic catastrophe. So some of the numbers with GDP that came out in the first quarter, obviously not great, but it was expected because of the pull-in of imports and stockpiling because of tariffs. And it looks like the global economy overall is still healthy. We'll need to continue monitoring this, of course, because things can change quickly. But at this point, it was fantastic news that Visa maintained its full year guidance. They're not seeing any reason to pull that or pare it back. So that's the good takeaway from this. From a macro standpoint, when you're a global company moving trillions of dollars in US dollars around the world into and out of different countries, processing transactions, this is a good pulse for the economy overall.
Bookings up next. And it's also a very good indicator of what's going on in the economy because it has some of the same factors that you talked about with Visa were topics of discussion on the booking earnings call. So here is their Q1 financial summary. They posted 8% year-over-year increase in revenue and adjusted EBITDA of almost 1.1 billion, which is a 21% year-over-year increase. And we'll show you a similar chart that we did with Visa on the free cash flow per share. It's a noisy looking metric. The chart looks messy, but over time you can see how much value Booking has had for shareholders over the years.
You see the periods of pretty big contraction for Booking in late 2019, early 2020, when the pandemic started. And then again, You can see it dip into negative territory there very briefly in 2022 during the bear market. Kasey said, very noisy metric here, but what you're looking for in a business like this is the overall, on average, compound growth potential for a company. This is the type of thing that buoys a portfolio during turbulent times.
Next slide, a breakdown of where they receive their revenue: room nights, rental car days, and airline tickets. Those are their biggest segments. They also have some other attractions that they're building out, a much smaller portion of the business at this point, but growing rapidly. They actually ended up having their biggest quarter ever in room nights booked, 319 million. And then, as you can see, all three segments grew sequentially year over year. Nice growth. And here is the regional growth rate, which was a little bit above their previous guidance. They said in Q4 that this quarter would be between 5 and 7%. It came in just over 7%, or right at it. And on the right side of the chart, there's the room night growth by region. Europe and Asia, both high single-digit growth rate, and then the rest of the world and in low double digits, and then the US bringing up the rear, low single digits. And then here's a breakdown of the US revenue that's created at booking versus outside of the US, the rest of the world. And you can see that the US revenue makes up a pretty small portion of the overall revenues for booking. And this is important because of what Nick was talking about, the concerns regarding some of this. And here are some comments from the CFO. There's obviously been a ton of talk about how travel has been stunted during this recent geopolitical climate, but the US revenue for booking, as it was for Visa, is overall a smaller portion of the business. And the CFO said that they saw moderation in trends for inbound travel to the US, so people coming into the US to travel, but they also saw an improvement in trends to other travel regions, like from Canada to Mexico. Maybe all the Canadians, they decided they didn't want to come to the US, but they decided to go to Mexico, which is...
You're going to fly over and wave.
Yeah, fly over and wave. And then the second half of this slide does show that US consumers are being more cautious with their spending. They saw a decrease in the length of stay, which makes sense. People are just not able to go for as long. This quote gives a little bit more color about why booking isn't super concerned about this. Because for booking, it doesn't matter. It's very similar to Visa. When money is being spent, it doesn't matter if it's coming from the US or if a traveler decides to go to Mexico. Generally speaking, they're spending a similar amount just at another destination. So it really doesn't make a whole lot of difference for booking.
So as long as the people and the money keep moving, these big businesses continue to just crank higher, slowly but surely.
And then here is Booking's Q1 free cash flow and capital return. Their free cash flow is $3.2 billion, up 23% year over year. And they repurchased $1.8 billion in shares, and they paid $300 million in dividends. And here's the guidance for the next quarter. They think that the room nights will increase by about 5% at the midpoint to over 330 million nights booked. So that it could be another record with another healthy increase to all the other metrics. And then we'll show you the full year guidance. The high end of the guidance of all these metrics is assuming that everything stays the same, with the same similar currency exchange rate, the same restrictions in place as they are right now in the macro environment. So still solid growth for the next quarter and throughout 2025.
The people and money are still moving. This is a good read, and I think it adds some important context to that US GDP chart that we showed you at the beginning of this. This is something that we stressed last year when the questions started coming up about macroeconomics. For a business owner, macroeconomics are mostly noise. The businesses themselves that you invest in can provide you all of the macroeconomic data that you need. So especially if these are big global businesses like Visa and Booking, where so much of their sales, of their revenue is derived outside of the United States, If you hyper focus on only what's going on in the US and start freaking out about worldwide destruction, sometimes there's reason to be worried about that happening. But by and large, the businesses managing our money for us can provide exactly the data that you need. And you can spare yourself the media, the sky is falling, doom and gloom story.